Hello Internet, I'm Jackie Fox, and today I want to talk to you about possibly the greediest company in America, and also one that has directly orchestrated the corporate structure of America for the last 15 years, if not longer. They are directly or indirectly responsible for many of the things that you may dislike about your current American present. And also there's another company that's pretty much a carbon copy of them, but slightly different, and we'll get into it later in the video. I'm really curious to know, by the way, what company or companies you think I'm talking about right now. So, if you could, pause the video and leave your guess in the comments. I'm really curious to see these. And even if you don't pick the company or companies that I'm going to be talking about in this video today, I at least hope that a lot of you have heard of these companies at least over the last few years. But the reason that I'm writing a video about them isn't so much what they've done in the last couple of years that you might have heard of. Oh no, it goes much deeper and to the core of American rot than you might imagine. Now, maybe you're thinking about Walmart. I've talked about Walmart before on the channel, and I did mention that they're a company that's known for stealing more from their workers than any other American company that is well known and operates as a legitimate business entity. But you are almost definitely thinking about Amazon, as they're kind of the poster child of a company that's grown too big, having such a massive share of the online marketplace that they have developed basically a horizontal monopoly of all consumer goods that are delivered to the home. You're probably thinking about how abusive they are to their workers and how staggeringly wealthy their famed founder has become from siphoning money from their paychecks into the bottom line of his business. You're also probably thinking about their disgusting anti-union efforts pretty much throughout the course of their company, but especially ramping up in recent years as unionization efforts have increased. But I'm actually talking about two companies that probably pay one of your grandparents' retirement checks.
Well, I mean, part of this inflationary problem is because we put too much money into the economy. There's way too much government spending, and that's why we have inflation. So that's a large part of that. It's just basic economics.
And that is not basic economics. We had this thing called a pandemic. We had a supply chain crisis. And by the way, there's a war in Ukraine.
It played a role.
So to act like the only reason we have problems now is because people got a little bit of money in their bank account is just not honest.
And a little bit of money, they got more than we spent in World War II. So don't act like
hold on.
Whoa.
Hold on.
Don't act like, you said don't act. Don't act like we had to react to the pandemic exactly the way we did. We had to spend $6 trillion.
Okay, but how about the trillions that the Federal Reserve shot at Wall Street? For some reason, people don't get upset about that.
How much? What'd you say?
Fueled the trillions of dollars the Federal Reserve shot at Wall Street to backstop the stock market and the bond market. No one gets upset about that, even though that was a massive
I don't know what
factor in
you're talking
inflation.
about. What do you mean shot at Wall Street?
Well,
when are we talking about?
We're talking about buying assets, buying stocks, buying bonds, buying treasury bills so that they expand the balance sheet. This is during the crisis, the coronavirus crisis. When the stock market crashed, that is what the Fed did. They went into action. They shot trillions of dollars.
But the stock market didn't crash during COVID.
Now it's crashing. It's crashing now.
It crashed, and the Fed came in and backstopped it. That's what happened.
What, it crashed and we never heard about it?
No, it crashed. Go back and look at it.
I think
it fell off a cliff.
When?
The Treasury bond market stopped functioning, and the Fed took extraordinary action it's never taken in history.
I don't
Somehow
remember
no one
that.
gets upset.
Maybe the first week of the
Somehow nobody gets upset about the rich people who got tons of money and tons of support, way more than working class people did. But oh my God, people were able to feed their kids and they had a little bit of money in their bank accounts. It was the worst thing in the world. That is one small part of the inflation story, and is, by the way, not the only thing that we can deal with to get out of this.
And at this point, I have to make a note. So originally, this video was just about one company, and I'm sorry if any of it seems written that way. I'm trying to kind of rejigger it as I write it. But I'm talking about BlackRock, mainly. Although I did get them confused with the company Blackstone, which is also a hedge fund. They're incredibly similar with maybe 1 to 2 crucial differences. And between the two of them, they create the effect that I'm going to be talking about in this video. So, I know it's confusing, and you know what? The other thing, there's another company that I get mixed up with these two. It's called Blackwater. who are probably most famous for being the most careless American mercenaries that are known widely in the world. They are so bad that after their day in court, the only people who are willing to stick up for them or interview them was Fox News. And they did a pretty fucking horrible job of it, as you might imagine. Now, Blackwater, thankfully, changed their name to Academy to try to escape the negative press that they got from wantonly murdering Iraqi civilians. Their Academy now, which is the same name as a sporting goods store near where I grew up. I mean, if you're really trying to escape into monotony, it's probably best that you change your name from being part of what is probably going to be called in next century's medieval revolution, the Black Trio, and changing it to a name that makes me think that you're a sporting good company instead. So, you know, I guess good on them on branding or something. You know, Academy really doesn't scream, we are heartless murderers who kill for money. In the same way that Blackwater kind of makes you think, that sounds ominous. Anyways, I've gone way too far off topic with that. So let's first talk about Blackstone. You might have heard of them recently because they're pretty much buying up every home on the market at above retail price, and the reason they're doing this seems to be to create a bit of a home value bubble, or at least to begin inflating one. This is similar to the way that wash trading works in NFTs. If that's something that you're more familiar with than this sort of economic bubble. But essentially, by paying way more than something is worth, you increase the chance that someone else will later buy that thing off of you, even more, because they see a potential for profit in what seems to be a rapidly growing market, which only seems to be rapidly growing because you're paying that extra. In some communities, Blackstone already owns 20% or more of the rental home property. At least, that was the statistic last year, and I'm pretty sure this has only gotten worse. So, right off the bat, if you were trying to buy a home in the last 2 years, and you were astonished by the staggering inflation in the prices of homes on the market, you should know that Blackstone is almost definitely to blame. Although, other companies like Zillow, which is covered in a Wisecrack video that I'm going to link in the description, and BlackRock also are helping in this process, although in different ways. BlackRock's website is very careful to mention that they are not the black geological entity that is purchasing up individual homes. Instead, they're giving the wealthy loans to buy those homes. So they own the mortgage to many American homes. In fact, they've lent out a lot of money like this during the pandemic. So they own a not inconsiderate amount of mortgages. It's kind of a petty difference between the two, but this is functionally one of the biggest differences between BlackRock and Blackstone, other than the pretty heinous shit that BlackRock gets into that I'm going to get to towards the end of this video. That said, it's not necessarily bad to buy things over asking price, but when you're a company that buys as many things as Blackstone does, going, say, 20% above asking price on so many different properties in the market at the same time has a tendency to raise the general valuation on the market in general. The market that they have now bought a large stake in is going up in price because they bought a very large stake in it, at vastly above the expected prices for the housing in the market as it stood. This very directly leads to a rapid cycle of housing inflation that only gets worse the longer they do it. And by continuing this cycle, Blackstone is also inflating the prices of the assets under their care. Now, why would they do this? Well, there's at least a couple of reasons to do this during the pandemic. A lot of people were concerned about the idea of inflation, which would devalue their money. But a less talked about side effect of inflation is that it also effectively decreases the value of any debts that you're holding as well. And this is where BlackRock comes into this. So if you take out a lot of loans before inflation hits, you're effectively paying back less for more. This is why a lot of wealthier people who were looking to make personal investments as a hedge against inflation tried to get into the new home ownership market during the pandemic, pulling out enormous loans from companies like BlackRock for new construction as an investment and as a hedge against inflation. Another thing that BlackRock is doing in the market is also directly funding the companies which are building these homes. So, I mean, while it is worth pointing out that Blackstone is the company that is actually buying and renting houses to the American public, BlackRock has a significant contribution to this as well in giving out highly profitable home loans to wealthy investors who are willing to pay even more than usual for property because they figured that the effective price of their debt would end up going down over time. These two things in conjunction mean that people who were buying homes in the market at that time were increasingly paying more and more and more in a feedback loop that drove up housing prices, which were already pretty unaffordable, and already this was kind of a process that had been happening since the recession after the housing market collapse, as a lot of these investment companies were buying up foreclosed homes during that time. But this has really accelerated during the pandemic, which is why a lot of you may be aware of this now. So while BlackRock was supplying the wealthy these massive loans that allowed them to compete with other people in the market, which were paying well above asking price, a company like Blackstone was actually doing this for themselves on a massive scale. Instead of loaning money out to other people to buy homes, they just bought them themselves. And this story gets even worse because we are in a similar yet different situation now economically, in that a lot of people expect to see a recession because of the increased inflation that we're seeing in the market. Now, a recession, broadly speaking, would drive down the prices of most investments. Unstable and more speculative markets, the likes of which I talked about in describing things like NFTs and the cryptocurrency revolution, where capitalism is effectively just making shit up that we don't need in order to create the sense of economic growth. These things in a recession would fail first, and we're already seeing this start to happen, and it feels like the cryptocurrency market is in such a precarious place at the moment that by the time this video released, the full crash may have already happened. Now, and I will link to this in the description, but we don't necessarily have to have a recession as a response to the things that are happening in our economy now. But there are also reasons why people might think that a recession would be good, even though I think most of us would agree that we probably wouldn't want to have one. Fuck! In a recession, some of the best investments, and the ones that investment companies are most likely to use to solidify their long-term positions, would be more stable markets, and with the exception of the housing bubble and crisis in 2008, housing is generally considered to be the most stable investment one can make within the American economy, other than mortgages, which are basically the same thing. In any case, it either through purchasing a home and putting it up for rent, or loaning a family the money to pay a mortgage, you are essentially turning a home into a way for you to create recurring income for your company and your investors. And this is in large part because you can expect that in no way will the government ever implement affordable housing in a meaningful way and cause a dip in this market. And that's also why there's such a strong push, especially from people who are capitalists, i.e. have the money to invest in companies like Blackstone and BlackRock, or own property that would be affected by the market, to never actually do anything about affordable housing or housing the homeless, or as I would prefer, making housing a universal human right. Now, I was thinking about writing a very similar video on Blackstone about a year ago. And I was going to include a lot of this, and I was also going to talk about the price of lumber among all the other things that are contributing to the problem in housing. And at that time, I looked into Blackstone and some of its competitors and investment groups and some of their larger portfolios. In a lot of those portfolios, I was looking for the products that had a guaranteed rate of return, which is generally like 3% back, maybe a little bit higher. And what a guaranteed rate of return means for an investor is that no matter how bad the market is doing, no matter how bad the individual assets owned in the investment group that you are funding, you will get at minimum that guaranteed amount back. Usually with the ways that these are set up, getting that minimum amount back isn't particularly difficult, but it does become harder during a recession. Though, because many of these investment firms are so heavily invested in the real estate market at the moment, this probably means that they will continuously raise rent prices as we go into the recession as a way to hedge against losing money as all of their other investment opportunities that they represent begin to go a bit negative. It's scary to consider, but they may see raising your rent price as a way to survive the recession and even thrive during it. And this is a bit precarious because looking at the situation that most Americans are in right now and looking at our relationship with our ability to pay the current rental prices, this seems like a bubble. It seems like doing this would force a lot of people out of the rental market, which would force a lot of these big companies underwater because the stable investment, which was the only thing that was going to get them through the recession, has now gone under too, and now all of a sudden we're facing such a large economic crisis that we just have to bail out these too big to fail companies, right? Remember how I said that it kind of felt like companies like BlackRock and Blackstone especially, and the way that they were shopping for houses or enabling people to shop for houses, seemed like they were intentionally inflating a bubble? That's interesting. And that's the point that I wanted to make in the original video. But it actually didn't really go anywhere other than speculation until now. While I got involved in activism around the housing crisis and bailout, I never actually knew that the company that handled the bailout until now. And that company, specifically, was BlackRock. As I've alluded to previously in this video, BlackRock is an investment firm. That means they buy a bunch of valuable assets that they expect to grow, and then they sell shares of these assets in particular pools, which are called indexes or funds, and they sell these to retail investor consumers, or, as we could just call them, actual capitalists. BlackRock is actually so big and has so much money under its supervision that it controls things like sovereign wealth funds for entire countries. That's right. Entire countries are invested in this company, BlackRock, and its products. And the scary thing is that the amount of money that they have under their control is practically nothing compared to the amount of real estate that they control. Because of this, and for a lot of structural reasons, BlackRock is rapidly becoming too big to fail. Actually, it was already. Let's get into that. Speaking of too big to fail, when many American banks were no longer separated by the Glass-Steagall Act, decided that they were going to invest in an increasingly risky investment opportunities in the housing market that ended up with the bubble collapse in 2008, a lot of the banks that ended up with massively negative sums on their balance sheet were considered to be too big to fail and were bailed out by the federal government. But as much as you might imagine this actually wasn't handled by the government directly. As you might imagine, instead of handing the bailout and making sure that the economy survived, this was all handed over to a single company. And a company itself that owned a lot of the assets that it would be potentially saving. So a company that was considered to be too big to fail and also managed the assets of a lot of companies that themselves were too big to fail. I mean, this is almost a completely brilliant strategy in investment. I mean, just follow me on this. Follow me on the absolute bullshit corruption involved here. 2008 sent absolutely the wrong message to American companies. So that a company like BlackRock could put itself in a position, and other companies could, through monopolization of the market, where they all become too big to fail. And if they become too big to fail, when they eventually fuck up making risky investments, which, when they work, make them a shit ton of money at the expense of literally everyone else in America. And when they fail, pretty much ruin everything in America for everyone else that's not them, they can be assured that unlike everyone else, they will be safe and they will get bailed out. Which pretty much means that they can manipulate the economy of this entire country to drop like a bomb on the entire economy and be sure that just like a fucking radioactive cockroach, they will survive no matter what. Naturally, BlackRock is not an unbiased arbiter of financial well-being in this country. So naturally, the bailouts ended up making their way almost uniformly to assets that were controlled by BlackRock, while allowing all of the assets that BlackRock didn't control to crater in price, which then often led to BlackRock or the companies that they control buying those companies in rock-bottom price mergers or buyouts, which were also helped and mediated by the government. Oh god, this is just fucked. So this dramatically increases the value of all of their investments while destroying pretty much all of their competition. Need I say more? Of course, this isn't the only time in American history that something like this has happened.
How about the trillions that the Federal Reserve shot at Wall Street? For some reason, people don't get upset about that.
How much? What'd you say?
Fueled the trillions of dollars the Federal Reserve shot at Wall Street to backstop the stock market and the bond market. No one gets upset about that, even though that was a massive
I don't know what
factor in
you're talking
inflation.
about. What do you mean shot at Wall Street?
Well,
when are we talking about?
We're talking about buying assets, buying stocks, buying bonds, buying treasury bills so that they expand the balance sheet. This is during the crisis, the coronavirus crisis. When the stock market crashed, that is what the Fed did. They went into action. They shot trillions of dollars.
But the stock market didn't crash during COVID.
Now it's crashing. It's crashing now.
It crashed, and the Fed came in and backstopped it. That's what happened.
What, it crashed and we never heard about it?
No, it crashed.
And of course, this isn't the only time in American history that something like this has happened. Recently, during the pandemic, we had a similar problem. And as a government, we had a lot of effectively bailout money that needed to be distributed, and the government again didn't want to be the one to do it. The story that you may have heard was that they outsourced this effort to banks through the Paycheck Protection Program. And as you also may have heard about the Paycheck Protection Program, this was pretty uniformly given out to people who didn't really need it, and all of the people who needed it most, especially those who were in communities of color, well, they didn't get shit. But what you might not remember is the larger bailout that happened before that. That was handled in coordination by, say it with me again, is it Amazon? Nope, definitely still BlackRock. This brings me to the part of the video that is a bit more conjecture. But with BlackRock itself being globally too big to fail, as its failure would result in the failure of certain whole state economies due to these sovereign wealth funds they manage, but additionally they manage a lot of other assets that are themselves too big to fail, as I mentioned earlier. Or have become even more so too big to fail after receiving the cash injections that our government just keeps handing them anytime they run out of money to wipe their ass with. And being the architects of both of these things that were massively unpopular in the distribution and rollout by the American people, most American people aren't actually aware of BlackRock's role in either of these things. Which is ultimately why I'm making this video. Because of its ownership of basically everything, its direct relationship with the government budget whenever bailouts are handed out, and the fact that it is almost certainly too big to fail at this point, kind of like the American version of Evergrande in China, which was also heavily invested in the real estate market in ways that don't really make sense from the outside. But Evergrande was also a lot more than that. It was an investment company that rivaled the size and scale of even BlackRock. So this definitely makes BlackRock the largest monopoly in our country. In fact, it's kind of a monopoly that owns other monopolies. It's a monopoly of monopolies. What the fuck is this shit? It's like a fucking Cronenberg demon of capitalism. Anyways, if one were to point to a singular group with an incredibly unhealthy amount of power over the US government that is not often discussed, and not often discussed to the full extent of their power over the US economy and US policy, I think it's at least helpful to know who we should be rallying against. Because while there's certainly a point in opposing companies like Walmart and Amazon, the amount of control that BlackRock and Blackstone have over the economy and the government is at least an order of magnitude stronger than even these companies, despite how wealthy and well-known their founders may be at this point, which honestly is kind of a distraction from the people who really own this country. And while they may be too big to fail, no company is too big to be chopped apart into its constituent pieces. Get the fuck on this, SEC. Come on. I know, they've got new leadership and they might actually start dealing with monopolies now. We'll see how toothless they end up being in this and how effective they can be. Cross your fingers and hope that America can fucking work for once, or at least work for us and not the people it was designed to work for. No company should have unilateral control over how the federal government spends such large swaths of its money, especially in times of crisis, and especially when that company is operating for its own profit and using the money that they receive to prop up their own investments. Because at this point it feels less like the American company is Because at this point it feels less like the American government is operating for the interest of the American people, and more so like it's just operating to prop up companies like BlackRock and Blackstone. So if any of you have fantasies about unmasking the Illuminati, look no further than the modern day owners of the world. And at the very least, the owner of your mortgage or your rental property. Thank you all so much for listening to yet another episode of Jackie Fox and Friends. I would greatly appreciate it if you would join my patrons. While I was taking care of my mother over the last year, I lost a lot of the patrons that I had. Even if you could just drop in and give $1 to get me even back to making $10 a month off of Patreon, that would be greatly appreciated. But even more important than that, even more important than giving me money, join my Discord. There will be a link in the description. I'm trying to bring as many people together from around the world as I can so that we can join up and build the kind of infrastructure, at least the digital infrastructure, that we require to build successful movements in this country. So join Slay the Behemoth.commie and help us build a more resilient socialist future. Thanks for watching and have a great day.